Hello and good morning. I welcome you to the morning meeting today on not Wednesday, Thursday, the 15th of March 2018. This is Jens Klatt speaking and exclusively presenting this format to you for JFD Brokers as their global head of research and education. Yeah, so in fact, as usual, we want to have a look at the markets, how things are going. DAX is showing itself quite volatile. I myself decided to step back today, not taking on any position. So in fact, my trading system I'm trading would have generated a short signal in the morning. When looking at the price action, you can see that after the first push on the upside in the DAX, obviously the market came back now. Nevertheless, all in all, this choppy price action is mainly due to the fact that we have the triple witching around the corner. So tomorrow is the big expiration here at the Eurex, and the interesting thing about this is that with the price action from Tuesday, which you may recall here, this sharp drop on the downside, it especially based on the price action from yesterday, seems as if that was kind of a stop fishing move, and that's one of the reasons, based on the experience and then based off what we've seen in the past here, what I've seen in the past around this triple witching and big expiration. That's usually a sign that probably we have not that much potential on the downside anymore. Nevertheless, I think, and this is exactly and perfectly what the current market and price action is showing. It's very, very likely that we get to see choppy pricing, price moves here up and down, and not clear and clean trending moves on an intraday time frame. And that's one of the main reasons why I just stepped back. I'd like to use today, right here at the beginning, before we have a deeper look at the markets, and not just at the DAX, but also other assets, to emphasize how important it is to have a second solution, especially when you're running several strategies, systems. And as many of you may be aware, I'm managing clients' money, and it's 100% transparent, so you can double check the performance on FX Blue, for example. You can see everything about performance, drawdowns, risk I'm taking here, and everything around this topic. If you want further information, just shoot me an email. I can send you the link. But what's more interesting in this context is that yesterday evening I ran into significant problems, let's say, with my laptop, and it just didn't work anymore. So I had overnight somehow to get a new laptop, which is close to impossible based on the fact that it's evening, respectively night. So if you're switching on your computer at something like, let's say, 11 p.m. GMT, you can imagine there is no shop out there where you can get a new laptop. Now everyone would say, well, why don't you have a second laptop? The thing is, I have a second computer. Nevertheless, it's a solution which is an old one. Let's say it's not as stable and not as powerful, the solution, as my laptop is. And so I run in where it's obviously I wouldn't call it a black swan, since it's technique, and that's something where you can say, well, IT related, and so you can say, well, probably chances are given that something is going wrong there. Nevertheless, the thing is that you have strategies running, and now if you run into a problem with your computer here, it could be that you cannot trade the markets then the next day. The problem about this is if you have especially a purely automated strategy, then it's necessary to trade it every day and all the time to make sure that you optimally capitalize on your identified advantage. And now the question is, how can you overcome such a problem? And sure, I, as a professional trader, respectively a money manager, well, I have to think about this before. So there is a chance that the computer will rather sooner or later probably break down, and you won't connect to the internet and anything anymore, your trading station and that stuff. But, and this is the great thing, and this is something where so-called VPS come into play. So I've prepared this already here. So that's the website from JFD Brokers, and once you go here to trading and then click on technology, you will find this website here, where if you scroll down a little, have the VPS solutions offered by JFD Brokers. And I want to say, based on what I just faced here today, I can be completely, I was completely relaxed, since I knew that it won't affect my trading in any way, since I'm running all systems on a external solution here on such a VPS. And I highly recommend it for all those out there who think about going professional with this trading. Respectively, it doesn't even matter if you're a professional trader or not. I think it's very, very important to have such a backup solution, and a solution which is not connected to your hardware standing on your desk every day. And such a VPS solution JFD is offering here is definitely worth a deeper look, and something I highly recommend. It depends on what you want. I mean, here we have the FODC and then the MyTrade host as two solutions. But wait 1 second, is there a third one? No. And you can see here it's recommended for those who are trading few terminals, medium number of trading instruments and indicators. And you have here a chance. All live clients of JFD are entitled to a 50% discount with FODC. So it's an external solution. It's not JFD, but it's an external solution. JFD offers here, and if you're a live client with JFD brokers, you can get a 50% discount here. Same is true for this one here, MyTrade host MTH. It's recommended for several trading terminals, large number of instruments and indicators. So it's source intense, let's say, and you take 10% off per month on any MTH dedicated server if use this JFD promo code here. So why I mention this is get in touch with such solutions here to make sure that you can really concentrate on solving such a problem with your hardware, your computer, whatever, if there's any issue coming up. The same is true, for example, for an internet connection problem. So it could be that your internet provider just is not capable of delivering the bandwidth, respectively the internet connection, as you agreed on, based on some problems wherever. And this is definitely something which you will rather sooner than later face in your trading, probably, and which becomes a problem in your trading, and where such a VPS, virtual private server solution here is definitely getting really important. And I think the extra costs here, which will save you lots of pressure you might face on top of the hardware being broken, is definitely worth it. So definitely have a deeper look into this. I again want to emphasize how happy I am that I have such a VPS solution here running. And now let's get back to the action, to the markets. So what do you expect for the DAX? I have to say I don't expect that much for today, to be honest. So all in all, I'm surprised to see this drop lower here, since in my technical piece I've already prepared yesterday evening, before, by the way, my computer broke. I was quite, let's say sure is probably a good word, that the market will most likely make back most of these losses and probably trade back towards 12,400 points here. Currently, this is not the case, but in fact, the market just gave back all the gains here after it broke out of the open range on the upside. It's now trading back below 12,300 points. But all in all, I have to say, I somehow doubt, especially with triple witching tomorrow, and also with the US equity market somehow making a stable and solid impression to me, that it's not that likely that the DAX will see so much more pressure on the downside. So, and that's one reason why I'd definitely be a little careful here after this push lower. It wouldn't be such a big surprise if the market probably will turn around rather sooner or later and then trade back towards 12,300 points. But all in all, present choppy price action with no clear trend developing. That's also something we can right now see after around 2.5, 3 hours of trading here. That the market is not clearly showing in which direction it wants to move here. So there's no real buying power coming up, which is inducing kind of momentum on the upside. Same is true for the downside. So there's no clear selling pressure building, which results in a downside momentum building up here. So I'm not saying that this is potentially coming in the upcoming hours, but again, somehow, based on the price action and with the triple witching big expiration at the Euros tomorrow, I don't think that there is such a good chance that we get to see strong trending moves in one or the other direction here. So yeah, that's it on the DAX. In fact, nothing more to add here. The picture is as follows. Once triple witching is through next week, probably we'll then see in which direction the DAX will push. We have to make sure that we still understand that we trade below 12,600 to 12,650 points, and this is the so-called trend support, even though it's a resistance line on the upside. Why do I call this support? Well, it supports this current down move of falling highs and falling lows, and everything below that is, from a pure technical standpoint, considered bearish, and that's why there's still, and all the time until till we trade below that level here and do not make it back above that, there's still a chance that there will be another leg lower, which will definitely and significantly push us below 12,000 points. Yeah, that's it. So nothing to add here. Right now, price action is very choppy. We can't really say in which direction the breakout will occur. For myself, I am sure that it won't happen today. Again, triple witching tomorrow. But then from next week onwards, let's see in which direction we'll push. Everything below 12.6 again, and the simple moving average 200 should be considered bearish and has still the potential to see another leg lower towards and below 12,000 points. So now let's have a look at the EURUSD and the developments here. Price action is also not that spectacular, hasn't changed dramatically since yesterday. So in fact, we're trading at the same level as we traded yesterday. What you can clearly see somehow is that the euro is not really strong right now. Yeah, so all in all, I think there's still some room that we'll get to see more likely a test of this region at the lows, even though it's a coin flip, since we're trading within a range. Within the overall advantage should be seen as neutral, so there's no clear advantage to be found currently short term. It's neutral between 2170 to 2120 on the downside and 2540, 2550 on the upside. Let's see where the breakout will most likely occur. The thing that yesterday, for example, retail sales came in below expectation. I think the third month in a row, disappointing, and we know that retail sales are the that they are the backbone of the U.S. economy here. That's definitely something to probably worry about, even though in combination with the producer price index coming in, I think slightly above expectation, and it's another potential stagflationary sign here. The reaction compared to 1 month ago, when the equity markets, for example, sold off sharply, then rose again. That's, by the way, something I mentioned already yesterday. So if we scroll into the chart, and here, that was the 14th of February. There was this sharp drop on the downside, and the market recovered sharply, and forthwrote this sequence of higher highs and higher lows after making after we saw a test around 11,900 points after the flash crash in the US equity markets at the beginning of February. The same is true for EURUSD. So have a look here. Where is it? The 14th of that's a 4-hour chart. Sure. So here we've seen a spike on the downside, and then the EURUSD taking off and attacking the region around the highs. That was mainly due to the fact, since chances are high that or higher, let's say, that the Fed will probably do not hike rates here 4 times in 2018, probably not even 3 times, and that was resulting in some US dollar pressure. This is not occurring this time. So I mean, the disappointment last month was clearly something which could be felt. Nevertheless, the signs are similar to last month, while the reaction is not even close as dramatic, respectively, not sharply selling off equities while the US dollar is offered too, but somehow the complete opposite. I wouldn't say it now, it's not the complete opposite, but nevertheless you can clearly spot that probably the market is pricing such a probability in here, even though it would be a bearish USD sign, for example, if the market does not sell off, or US dollar is not selling off on such news, it's probably some kind of some small sign of some strength here. And this is somehow giving a bigger chance that we get to see the test around 2170, 2220 here, instead of now shooting up here and attacking again for 2450. So I'm more likely on the downside, even though based on the overall picture, which is neutral to choppy, definitely reduce the position size here. So let's have a look at dollar Japanese yen, also very interesting. Japanese yen itself presents itself quite strong. And so the US dollar can't really take off, and so the Japanese yen currently as one relative strong performer in the G10 currency universe, can profit from that and is pushing towards and back below 106 again. Main focus is still 105, 105.50. If we drop below that, it could lead to another sharp drop, which will first aim for a target around 104.30 to 104.50, and below that, and probably in the upcoming weeks we could see a drop towards the region around 100 here. So currently, also intraday, I definitely favor short engagements in dollar Japanese yen. Same is true also for euro Japanese yen. So also here you can see that after the break below this quite significant support around 132, probably 31, 32, so this region at least here, the market can't really recover those losses. It's only retesting it. That's potentially the equivalent to finding a short trigger here, and from here now aiming again for 129.50 and probably even lower than that, and going down as low as 128. So these are the short-term targets, I'd say. Yes, so that's it. That's it here on the yen. Let's have a look at that pound sterling. There was a very interesting move yesterday with the break above this trend line, and now the market can't really take off. Nevertheless, finding definitely some support here in this region, which I pointed out as a potential long trigger, 139. 39.20, 39.30 here. Let me just have one short look at the economic calendar, if there was any news offered today which could result in bigger volatility. No, not at all. So not one bit. It's still the same picture as yesterday from a technical standpoint. I consider 39.30 a potential long trigger, and if we make it back above 140, next target could be found at 40.70, and above that around the February highs, which are these the February? No, I'm sorry, it's not, but close. Here around 41.30, which could we aim for. Then all in all, it looks as if pound sterling has ended this corrective move here, which started at the end of January. So yeah, that's it on pound sterling, and in fact that's it. So let me just have a look here. WTI probably nothing spectacular. We're still stabilizing above this blue trend line, which is a positive sign. Things for the bulls on daily chart would turn a little sour once we drop below 58, but so far it looks quite stable what crude oil is delivering here. Same is true for gold. Hasn't changed to yesterday. Still choppy price action. I still consider chances to be higher that we'll get in the near term. A test of the current highs here around 1,360 to 365 instead of a drop towards 1,300, even though if such a drop occurs, it probably only makes potential risk reward more attractive, since the overall picture for gold is still positive, I think, and especially from the fundamental perspective, with the potential recession on the horizon here for the US, I think that chances are higher that their breakout will occur on the upside, and that will push significantly, and I really mean significantly, above 1,400, then dropping sharper here on the downside. Nevertheless, short-term traders are definitely currently quite unhappy, I think, with gold, since price action is not that spectacular, but overall price action is very, very choppy without clear, clean trends, which intraday traders could capitalize their edges on. And that's it from my end. I hope you enjoyed the morning meeting. I wish you all the best. Happy trading. Watch your stops. Talk to you again tomorrow, 10:30 a.m. GMT, with the morning meeting here into the weekly close. And that's it from my end. So have a nice day. See you tomorrow. Talk to you tomorrow. If you have any questions, shoot them over. Take care. See you and bye-bye.